The most historically significant thing that's ever happened to Bitcoin just happened. A spot Bitcoin ETF was finally approved. In fact, all 11 applications were approved by the SEC this Wednesday. This is insane. I can't believe we finally did it. Now, something else happened this week which will someday make it into a movie, but it includes the SEC, which argues bad passwords are securities fraud and market manipulation. In fact, they've even sued other companies for having their accounts hacked online before. But on Wednesday this week, the SEC's primary X account was hacked, and the hacker tweeted out, "Today the SEC grants approval for Bitcoin ETFs for listing on all registered national securities exchanges." The cryptoverse, of course, exploded. The price of Bitcoin went way up, and then a couple minutes later, Gary Gensler, the guy in charge of the SEC, tweeted from his own personal account that the SEC account was compromised and they did not approve the Bitcoin ETFs. Well, price of Bitcoin corrected and it went way down, leaving everyone to wonder who's to blame.
Okay, and so I'm just going to reiterate it one more time. It would appear that X has been hacked, that the U.S. government, the SEC, has not been hacked, which in of itself would have been
awkward. Because that's what the SEC sues companies for. And in this case, CNBC says, obviously the SEC account was not compromised. It wasn't their fault. It was the fault of X, the platform. Except it turns out, it wasn't, because a follow-up tweet from X and their security team revealed it was the SEC's fault because they didn't have two-factor authentication turned on. Which is also why I petition that the SEC sues the SEC for securities fraud and market manipulation. How the turns have tabled. Negligence, I tell you. What's even more embarrassing is that the next day the SEC had to admit they did actually approve all the spot Bitcoin ETFs. JK, we're just pulling your leg. The good thing is we got some memes out of it because the SEC thought this was no problemo. But according to the narrator,
it was all problemo.
Now after the SEC was hacked, they found their favorite bookmarked post of Gary Gensler admiring himself as a Simpsons character. Of course, the suspect of who did this is the Bitcoin CEO, but the real villain? Scooby-Doo meme. The jokes write themselves. So anyway, like I promised, today I want to show you the long-term effects on the entire industry and its price, and then later in the video, I want to show you a cost breakdown of some of these ETFs, which ones are good, and which ones to maybe stay away from, so let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the Bitcoin and the crypto channel. Now, before I explain what these ETFs are and how much they cost, I want to first explain why this is so important, because Bitcoin was created in 2009 as a way to give people a different way to hold on to their wealth that was outside the traditional banking system and their bailouts, because Bitcoin couldn't be bailed out. And that was really important because, for context, that was just 1 year after the great financial crisis of 2008. And at first, I think Bitcoin wasn't supposed to be some challenger or replacement to this system. Even throughout its own history, it had a lot of internal conflict as to what it actually was. Was it a cash replacement for sketchy transactions on the internet so the government couldn't trace you? Turns out, not really. It wasn't as anonymous as people thought it was. Was it maybe a currency? And it kind of was when it was cheap to use. Turns out though, once it got too popular, it became too expensive to use as a currency. Was it maybe an inflation hedge or a store of value? What was it, right? The narrative sort of evolved, but ultimately what it really was just there for anyone to use however they saw fit. And as it grew, it became hated by all the grown-ups in the room. They tried to fight it, and they tried to attack it, but eventually they realized they couldn't just get rid of it. They couldn't regulate it, and they couldn't shut it off. The Pandora's box was open. And as it grew, it made a lot of frenemies along the way.
What I've always said is that Bitcoin doesn't have value, and I don't care what other people do with Bitcoin, but what I was also pointing out is that the actual use cases are sex trafficking, tax avoidance, anti-money laundering, terrorism financing.
Bitcoin is for criminals, I tell you. That's why we're involved in it. It's true, look it up, weird stuff. But I think all the grown-ups at this point who opposed it have finally had to admit that this thing is not going anywhere and it's finally here to stay. They're excited because they know they'll make billions for the management fees. So let's now talk about how all of this will actually affect Bitcoin's price. So the closest prediction for what would happen in all of 2023 was from Tommy Lee of Fundstrat. He was the closest one to calling the economy, what would happen to the stock market, and inflation.
Tom, Happy New Year.
First
off, congratulations on your calls this year. You've been directionally correct. That's hard to do, so kudos to you. You're top dog now, 5,200. You have the high estimate for the S&P 500 for 2024.
Now, because he was extremely accurate with his prediction, the world really values what he has to say. And Lucky for us, he's a huge supporter of Bitcoin, and here's what he says would happen to Bitcoin in 2024.
Give me your 1 year and 5 year price target for Bitcoin.
I think in the next 12 months, something over 100,000, maybe 150,000. And, in the next 5 years, again, there's a finite supply, and now we have a potentially huge increase in demand with a spot Bitcoin approval. So I think in 5 years, something around 500,000 would be potentially achievable.
I love grape juice. Very old, finely aged grape juice. Actually, it's not. This is vitamin C because I think I'm getting sick. It's gross. So Tommy Lee says that because of this ETF approval, it could get Bitcoin in the 6-figure range just this year, and in 5 years, it could get to $500,000 per Bitcoin. Now, the question is he too bullish, and is he just saying that because he holds a giant bag of Bitcoin? And there is probably some truth to that. But I did some simple math, and here's where he's coming from. Over the last 5 years, the total return of Bitcoin was 1,872%. That's what's called a cumulative return, which I got by adding up the last 5 years of Bitcoin's returns. Now we have to take that number and convert it into a yearly growth rate, and the fancy word for that is compound annual growth rate, and the acronym for that is CAGR. We have an intergalactic CAGR. Men in Black? Just me? Okay. Anyway, Bitcoin's CAGR, or compound annual growth rate, is almost 80% per year in the last 5 years. Now, as Bitcoin gets older and older, and as more people have access to buy it, its returns will actually get smaller and smaller. And how we know this is because if we look back even further in Bitcoin's history, the returns are bigger. So we know for sure that as Bitcoin matures, the returns will get smaller and smaller and smaller and smaller with each year that passes. Now, for Bitcoin to 10x in the next 5 years, the returns would actually be consistent with this theory, because a 10x over 5 years' time is a 58% CAGR, or compound annual growth rate. Now let's take a look at something even more bullish. Cathie Wood's prediction, which is anywhere between 600,000 to 1.5 million per Bitcoin by 2030.
Our base case is in the $600,000 range. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is $1.5 million by 2030.
Sounds absolutely insane. But let's use something in the middle, a little bit more reasonable. $1 million by 2030, which also sounds insane. Let's use that same math though, because from today, that's 6 compound annual growth periods. And from 46,000 where it's at today to 1 million in 6 years is a CAGR, or compound annual growth rate, of 67%, which is actually in line with the same theory of diminishing returns. So the point I'm trying to make is that I'm not just throwing out these random numbers that sound really high to excite people. This is using historical context of what Bitcoin has done in the past. Now, on the subject of past history though, let me show you another comparison that not everyone is going to agree that I should be making, but I think it's a fair one, and I'll explain why. Let's compare Bitcoin to gold's ETF. After gold was securitized and it was turned into an ETF, gold's price 4x'd in about 7 years. Now, the argument that I want to address though is, Andrei, you can't compare Bitcoin's ETF to gold's ETF, because back then, less people had gold in their portfolio because less people had access to it than people have access to Bitcoin today. And that is true. It's way easier to buy Bitcoin today, even before the ETF came along. It was already simple. Back then, you had to buy physical gold and the hassle of storing it and insuring it that no one wanted to deal with until the securitization of gold in this digital form. That is a great point, except I think it's missing one really big, important piece of context. At the time, countries and nation states had huge amounts of gold in their reserves. The big money was already tapped out. So that means that 4 times multiplier to gold's price was mostly retail driven. Now, Bitcoin has the exact opposite problem. It's the big money and the nation states that are now chasing it. It's the retirement accounts, the pension funds, the 401ks, the IRAs, and the Fortune 500 companies where we could see billions of dollars flowing into Bitcoin over the next 6 years. So that 10x multiplier, or 20x if you're Cathie Woods, could actually be reasonable in the next 6 years, even if it's not mostly retail driven, which even in that regard, I still think Bitcoin has miles to go. On top of that, since Bitcoin's supply is halving in 2024, its flow will become less than gold. So Bitcoin will become more rare than gold by its rate of production. And a spot Bitcoin ETF actually removes Bitcoin out of the circulating supply, of which already 70% doesn't want to be moved or sold. So in theory, we should see a supply and demand shock on both sides of the equation, which means really good things for Bitcoin's price. But all I'm really saying is I do think it's fair to compare Bitcoin to gold's ETF, and I'd even say that Bitcoin has the edge here, but I am biased, so take that into consideration. I just think Andrei wants you to buy Bitcoin so you can pump his bags. My videos, and if I had 10 channels like mine, would not even be able to budge several $100 billion market caps and ones that are approaching $1 trillion because math. So however you want to invest is totally up to you. It's your choice. I have no stake in it, and Bitcoin will do its thing with or without me. Now let me give you a breakdown of some of these ETFs and their expense ratios, which is our yearly cost. Right now, the worst ETF is ticker symbol GBTC. So if you see that, maybe reconsider it because right now they have a 1.5% annual expense ratio. And just to give you an idea of just how much money that is, a $10,000 investment with them after 40 years, assuming 8% returns, means you'd end up with $124,000 after having paid $93,000 in fees. So just remember that what seems like a small 1.5 to maybe 2% expense ratio could end up costing you 40% of your overall returns, which is insanely expensive, so be very careful. Now, at least 7 of these ETFs are also getting rid of their fees for a limited time. Some of them will be charging 0% fees for 6 months or until their fund reaches $1 billion in size, whichever comes first. And then afterward, their expense ratio is between 0.2 to 0.5%. But stay as close as you can to the 0.2%. I think the top 3 though that are eventually going to compete with each other is going to be Invesco, Fidelity, and BlackRock because they have the name brand and the money to create a really solid product. Fidelity, for example, is charging a 0% management fee until July 31st. So that's roughly 7 months from now, which means that based on this metric, Fidelity is the winner. But after that 7 months period is up, they'll be charging 0.25%, 0.25%, which is not going to be the lowest at that point. But the difference between 0.25 and 0.20 is 0.05%, which over 40 years is only $3,500. That might be worth the premium if you trust Fidelity's brand and you think they'll be around 40 years from now, because they have been around for a long, long time. Now, the truth is, right now, I can't tell you which one of them is the best based on which one has the lowest fees, because it's a lot more complicated than that. Like some of these companies will be buying their Bitcoin from different places at different price points, and how much it costs them to store it will be different. But all of these uncertainties will be reflected in the hidden cost of the ETF itself. And as investors, what we're looking for is the one that tracks the price of Bitcoin the closest to itself. That'll become more obvious in the future. But beyond the numbers, there's also other things to consider. Like some people value brand name and recognition and the age of a company. Like Fidelity, it's almost 80 years old. But some of these other companies with less money have a lot more experience with protecting Bitcoin throughout hard times, and these are just some of the things to consider. Now, personally, I'm running an experiment where I've invested $100 into each of the ETFs. And in theory, if all of them are created equally, I should end up with the same amount of money. But I think that over time, I'll end up with a clear winner, and I'll tell you more about it in the future when I figure it out. Now, personally, if it were me, I don't think I'd invest in any of these ETFs because I think buying Bitcoin and holding on to it myself is the best thing that I can do because I actually control it and there are no fees. I use Coinbase to do this, which is where most of these ETFs will hold their Bitcoin, and then I can transfer it to cold storage. Now, you can use my link down below if you find one to support my channel. Otherwise, let me know if you'd like me to make a guide for you. But I do think ultimately this is the next chapter in Bitcoin's life, where most of the grown-ups have to admit that this thing is here to stay. And I say most because Vanguard and State Street still don't want to participate. They think that unlike stocks and bonds, most crypto assets lack intrinsic value and generate no cash flow. That's fine, maybe someday they'll change their mind. I don't think Bitcoin needs them, but ultimately I think the best outcome from all of this is that it will give people a chance to invest into Bitcoin in a way that's easy, cheap, and most importantly, safe. And I don't mean safe like safe from price fluctuations, because Bitcoin could still go to zero, but safe from the perspective that any regulated brokerage, which is all the popular ones, will be given the same sort of protections and insurances to the Bitcoin ETFs that they offer for all the other securities. I'm talking about SIPC, and that protects against the losses with a limit of up to $500,000, which includes up to $250,000 in cash. And that is amazing, and it's a huge deal. Well, there you go. So we finally did it. Let me know down in the comments below if you want me to make a video guide on how to self-custody Bitcoin so you can avoid all the fees, buying on an exchange, transferring to cold storage. It'll be a whole guide. Or if you want me to make a follow-up video on these ETFs and which one is the best once we have more data. Otherwise, have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks. Links are down below, and they'll go track them automatically with the spreadsheet link down below on my Patreon. Love you. Thank you so much for watching. I'd love to see you back here on Monday and Friday, sometimes a Wednesday. See you soon. Bye-bye.